Hi, everyone. We already dealt with the concepts under Ind AS 19, that is employee benefits. It's time to apply that knowledge with the help of several questions and scenarios for the particular standard. We are given this that Omega Limited is a technology-based company catering to offshore clients with 1,200 employees on their payroll in 2019-20. It has the below mentioned leave policy. Privilege leave, that is PL, 30 days in a year, for example, out of which 12 days can be carried forward. Sick leave, that is SL, 12 days of sick leave, out of which 6 days can be carried forward. Casual leave, which is 5 days, but it cannot be allowed to be carried forward. Based on the historical experience, below trends are expected by Omega Limited with regard to utilization of carried forward leaves. There are 300 employees who will utilize 6 days of PL and 3 days of SL. The 900 employees who shall utilize 12 days of PL and 6 days of SL. So they're all carried forward, right? Omega Limited has been making profit since 2010. The company's profit for the year 2019-20 is 2,500 crores of rupees. Omega Limited has determined that it will incentivize its employees by distributing profit of 5% during the year. The company is seeing higher attrition and accordingly estimates the payout will be 4.5% of this 2,500 crores. Also, it's mentioned that Omega has a defined contribution plan. The total contribution towards the plan is 120 crores payable within 12 months from the reporting date. Omega Limited has paid 30 crore rupees to its employees in 2019 and 20. The question's requirement is what should be the accounting treatment of the above mentioned benefits. Importantly, in this case, we have provided three categories of or three types of benefits. One is, of course, about the leaves. The second is about profit sharing. And third is, of course, defined contributions. Okay. Now, both the leaves and profit sharing are examples of short-term employee benefits. Okay. And as far as defined contribution is concerned, it is an example of course, again, we call it as a short-term employee benefit, but it would be. But let's not categorize that. Even that would be an example of a short-term employee benefit only. All right. So when I look at this scenario, right, we are simply saying that defined contribution is an example of course, retirement benefits. Okay. Now, essentially, the moment you talk about the short-term employee benefits, you need to create a provision and an expense for these employee benefits, which simply means as far as the leaves are concerned, my provision shall be based on 6 days of PL for 300 employees and 3 days of sick leave SL for those 300 employees, and also 900 employees into 12 PL, and of course 900 employees into 6 SL. So this is the provision for leaves and the related expense that needs to be recognized as far as my leave balances are concerned, right? Now, as far as the profit sharing is concerned, the profit, of course, is expected to be 2,500 crores. And on that, 4.5% is the amount of provision that needs to be created. It's a pure expense to be charged in the statement of profit or loss. All right. So that is something that needs to be accounted for as far as these two amounts are concerned. Regarding the defined contribution, right? Any such contribution needs to be, again, charged as expense on the basis of the amount payable, right? On the basis of the amount payable, which in given case is 120 crores, right? Now, since again, it is payable within 12 months of time, so there is no, or the amount of 120 crores needs to be charged as an expense since the amount is payable within next 12 months, no discounting is required. No discounting is required. It's also mentioned that 30 crores has already been paid. It means that the expense to be recognized is 120 crores, out of which the amount already paid is 30 crores. It simply means that the 90 crore rupees is the liability to be recognized. Okay, so that is how you are able to address the requirement of the question from that perspective. Okay, let's have a formal look at the solution here. So that's all information given, the number of employees, etc. I don't want to spend a lot of time on this, but yes, if you look at the short-term compensation expenses, we would need to recognize the 6 days of PL for 300 employees and 12 days of PL for remaining employees. And that's what we have done as well. So let's have a look at it. We have got 300 into 6 and 900 into 12, and then 300 into 3, and then of course 900 into 6. As far as the profit share is concerned, that is 2,500 crores into 4.5%. That becomes 112.50 crores. Just the calculation. And finally, when you look at the defined contribution, you would need to recognize the corresponding liability and as an expense as well. Now, since you have already paid 30 crores, right, that's this amount, you would need to recognize a liability of 90 crores, all right? And of course, there's no discounting that needs to be, of course, done as a part of accounting. All right, thank you very much.